Hey guys, what is up? It's me again. I got a lot of positive feedback, and a lot of people ended up watching that tips for beginners on the stock tips. So I just wanted to go ahead and give you guys my top 10 post-COVID rebound stocks. So I did a lot of research, got a lot of numbers to run by you guys. Here, in no particular order am I going to run through these. I'm not ranking these like worst to best. I'm just giving you my top 10 picks. I invest in a lot of these companies. Some of them I don't have holdings in. I'll disclose all of my positions because I don't want you to think I'm biasly selling you a stock that I have a position in to try to raise the value of a stock, right? So we're just going to get into it. Again, if you have any questions or comments, drop them in the comments below. Shoot me a message. I'll answer them, or I'll make another video addressing that stock and what I think about it and what to do, buy, hold, or sell it. But yeah, hit the like button, hit the subscribe button, and we're going to start it off. So the first stock I want to talk about is MGM. A lot of you should know they're hotels or resorts. They're big gambling and hotel stock. So right now, I own 68 shares at a cost average of $15.75. So I've already made quite a bit. It's at $21 a share about right now, last I checked. They give a small dividend. It's not really worth noting, but the year-to-date price still, after it's had a pretty good rally lately, it's still down 34% this year. In its 52-week range, obviously we missed the bottom, right? Had a low of $5.90, and the 52-week high was $34.64. So that's pre-COVID. The shares were at $34.64. Right now it's sitting at about $21. I don't think it's going to skyrocket to $34 anytime soon. That it's pre-COVID level, but I'm holding a pretty good position. It's about 5% of my portfolio, and I think in the next 2 years, MGM has a high chance of producing another 75 to 100% return, just due to. I think we'll see once COVID does get a vaccine and travel does reopen. I think we'll see a huge fluctuation of people traveling, going to destinations like Las Vegas, where MGM has a lot of hotels and gambling and everything. So I think that stock price will rise a lot within the next 2 years, is what I'm calling it. I think we can see up to 100% returns. So I'm considering that a low risk stock option. And news on top of that as well is the IAC, the Interactive Corp, invested about $1.2 billion in the stock recently. They own about 12% of that stock. So that's what helped it jump a little bit here in the near term. Still think it has a lot of money to be made long term. All right, the second stock I want to talk about, a lot of you guys might not have heard of or might not know a lot about. It's PG&E, ticker symbol PCG. It is a energy company out in that serves Northern California. So I own about 145 shares at an average cost of about $9 over there. So I've made a really small. I think I've made like $40 on the stock so far. But it's year to date way worse than MGM. Its year to date is negative 50.84%. So it's almost been cut in half. Its 52-week range, it bottomed at $3.55. $3.55 a share, and it high'd pre-COVID at $19.18 per share. Now, I say pre-COVID, it's not only the coronavirus that knocked this stock down and beat it up a lot. They had to file Chapter 11 bankruptcy due to a lot of wildfires caused by their landlines, right? So there is some risk associated in this investment because they could have more fires occur on their watch and refile for bankruptcy, all that. But they've pulled themselves back out of bankruptcy. They've done a lot more drills. You can look up National 811 Day. They run a lot of drills to prevent that. They're starting to shut people's power down in stormy conditions and stuff to help prevent starting fires. And the big thing that really sold me on the stock is they're the only energy provider for a lot of people in Northern California. So even if they go bankrupt again, I think I'm going to buy them on that dip. I think if that stock goes down, it's something I'll continue to invest in long term. Because I think as time goes on, as long as no disruptor comes into that market and takes away market share, which right now there is no one, I think it's just going to gain. It's only going to gain. People move to California all the time as they get pushed out of the bigger cities. Silicon Valley. They move up more towards the mountainous, or the can't think of the word right now, but the less city and more kind of rural towns up in Northern California, and they have to get energy, right? So I think PG&E is a really good company. I gave you guys my position in it, and I think in the next two to 3 years we could also see about another 70 to 80% return in that investment. I'm calling it a low to medium risk investment just because if a disruptor does appear in that market and take away market share, and they file for bankruptcy, they could go flat, right? But I don't really see that for happening. I'm just letting you guys know what I think the only risk is in that company. My next one I want to talk about is AMC theaters. I'm sure a lot of you guys have heard about that. I own about 287 shares at about $4.72 per share. Right now, their year to date is negative 60.45%. Obviously, movie theaters are getting slammed right now due to coronavirus. Their 52-week, though, they bottomed at $195 a share. I wish I would have got in there, right? But they high'd at $12.49 pre-COVID. So that's almost 2 to 3 times what the stock is trading at right now, right? A big thing I like about AMC, if you guys didn't know, is they just pinned a deal with Universal. So for a long time, AMC Theaters had it exclusively to where a big box office theater production, a movie, had to run in theaters for 3 months before it could be sold at home on pay-per-view or on demand, right? So they coined a deal with Universal Studios now that 17 days after a movie runs in theaters instead of 3 months, so cutting the timeline down drastically, they're allowed to sell the movies on demand. But normally you'd think, oh man, that sucks for AMC. When they come back, people will still want to do the on-demand thing. But AMC in this deal coined to get a percentage of those on-demand sales. So I think that's pretty big. I think that helps them stay around. One risk with AMC is their cash balance. They've had to raise cash, and they've had to do a lot of debt restructuring to stay afloat during the coronavirus times. I'm still betting on them, and I buy a couple of shares every time their stock goes down on any given day because I believe in AMC bouncing back pretty big. I think it's about a medium risk investment because they could go bankrupt. But that's what I wanted to talk about with AMC. The next one, I'm sure all of you know, is Starbucks, ticker symbol SBUX. So Starbucks, I own only about 17 shares, but at a cost of $75.05. So I've made about $40-50 on this one as well. Its 52-week is from $50.02 to $98.14 was the high pre-COVID. So it was about to break $100, and it's sitting around 78, 79 right now. So I consider this a low-risk investment just because when COVID's gone, Starbucks is going to be huge again. I think it'll have no problem skyrocketing back up to that $90, $98 mark. I think one of the reasons it's been affected so hard is the people are working from home. You see people teleworking, unemployment skyrocketed. People just aren't leaving their house to go to that morning commute to hit the Starbucks on the way. So I think as we transition back, Starbucks is a pretty safe bet. I just can't imagine a world without Starbucks. So for me, that's a pretty sizable. It's about another 5% of my portfolio. I believe in it long term. If it ever dips to that 75 mark, I always buy more. But yeah, that's what I think about that one. It's year to date. I don't know if I told you guys that one. It's down 21.27% on the year. So hopefully at least 20 to 21% returns I foresee in the next 6 to 12 months. Next one I want to talk to you guys about is Cinemark, another movie theater. So this one doesn't have a deal with Universal or anything, but Cinemark has a way better cash balance than AMC to weather this storm of coronavirus. I own about 113 shares at $11.33 average share price. So the 52-week on this one was a bottom of $5.71 per share and pre-COVID high of $40.14 per share. Its year-to-date is a staggering minus 71.94%. That's currently. So I think this is a low to medium risk, just again on the thought of a bankruptcy happening to a theater, right, or just the threat of there never being movie theaters again, right, with all the streaming services that are occurring. But I again, like I said with MGM and travel and stuff, I think as soon as we can get the coronavirus under control and people are allowed to go back to normal daily life, I think movie theaters are going to skyrocket back up. I do think it'll take some time for Cinemark to go back from $11 to $40 a share. I'm calling about a 3 to 4 year for this to make about 400% on return of investment from its current price. So I'm invested in it. I'm going to hold it for the long term. I'll buy on any dips, especially if I see it get near that $10 mark again. I'm going to pull the trigger and put a lot more in. But the next stock I wanted to talk to you guys about is American Airlines. So American Airlines has been kind of crazy. If you've been keeping up with it, and if you haven't, I'll fill you in. So it's 52-week. Its bottom was $8.25, and its pre-COVID high was $31.67. It's year-to-date down 50%, 50.33 to be exact. But about 3 months ago, I want to say, it almost doubled in value. It had like 120-something% rise, and it's cut about 50% since then. But we've started to see airlines start ticking back up as travel starts occurring more and more. People feel safer. TSA has made a lot of steps. You can look. I don't have the website off the top of my head. I wish I did. But I'm sure if you Google it, it'll pull it up. We just had our first 800,000 people plus flight day in a long time. So people are flying more and more often and frequently. The number is going up. So as that trends upward, the stocks will trend upward as well. I'm saying American Airlines. I'd recommend looking at all the airline stocks. American Airlines is my personal favorite, but Southwest, United, and Delta are all good stocks to look at. And on that note, Boeing's another one to look at, but we're not going to talk about all those. We're not going to get in depth on those. American Airlines is my pick. I think it's at $13.69 per share right now. Again, its pre-COVID high was $31. To me, this is a little bit of more of a medium to high risk, though. I've talked a lot of positive about American Airlines, but their cash balance is pretty rough due to the losses they suffered due to COVID-19. So they are pursuing a bailout option, and there is a threat of bankruptcy for them. So that'll drive the price down. I own 0 shares of American Airlines currently. I'm kind of holding my breath and hoping that the stock price drives down closer to that $10, maybe single-digit mark. I know it's high hopeful for that to happen because it's been on quite a tear pretty lately. But that's kind of what I'm hoping for. I know it's probably mean to say, but I hope they declare for bankruptcy or something of that sort that kills the stock price because I do believe in this long term. I'm just kind of being greedy and waiting for a dip to buy in. So that's my take on that one. The next one I want to talk to you guys about is Under Armour. A direct competitor to Nike and all the other sportswear, Adidas, whatever your sports pick is, right? But I really like Under Armour. They're down 51.06% on the year. Their 52-week range is from $6.37 a share to $19.65 a share before COVID happened. Currently, the stock's sitting at around $9 a share. And the big thing with them is they're going through a breach of fiduciary lawsuit with their CEO. It's basically to give you the layman's term version. Their CEO is under investigation for mismanaging the company and hurting the company. So the details of that investigation haven't come out yet. I'm not too worried about it. I own 0 shares of Under Armour. Everything we're going to talk about here from here on out, I don't own any of personally. I still really like the stock, and I highly recommend everyone looking at it. My price point for me to try to get in is if I can get it at that $8.60 or $8.50. If it drops a little bit more, I think I'm going to pull the trigger on that one. The next stock I want to talk about, though, is Rocket Mortgage. All right, so this one is the most volatile stock we've talked about today. This is the, short-term riskiest stock we've talked about today. It just became a public company. Its ticker symbol is RKT. I love this stock though. I own 0 shares right now, but I think tomorrow morning I'm going to invest $1,000 in it, which right now would get me about 50 shares, I believe. So far since it hit the market, it opened publicly at $17.50. It hit a high of $26.85, and it's back down to about $20. You'll see that happen with IPOs a lot, initial public offerings for the newer guys. When a stock goes public, it usually skyrockets in those first couple of days of trading, and then it hits a massive pullback. You'll see that most of the time with IPOs. But I really like Rocket Mortgage. It's more than Rocket Mortgage. It's the Rocket Group. It owns like Quicken, and Rocket Mortgage is one of the ones I love for that company. I think this has huge long-term growth potential. And one of the biggest selling points for me is I think as our generation, millennials, and the generation beneath us, the Gen Z, the Zoomers, I think as they transition in the next 5-10 years, and maybe even less, into becoming first-time home buyers, I think Rocket Mortgage is a huge is going to take a lot of the market share in doing those mortgages for our generations. I think it's very user friendly. I think it's a millennial targeted product, and I think over time I don't even want to put a price on this because I think this just has huge gain potential. Again, I currently own no position in this company, but I am planning to buy tomorrow morning. So yeah, we'll keep an eye on that. I really like it. And last but not least, I want to talk to you guys about DraftKings, ticker symbol DKNG. Year to date, it's the only one we've talked about today that is up. Year to date, it's up 249.28%. Its 52-week is from $9.77 up to $44.79 pre-COVID. So it's currently sitting at about $31 a share right now. I own 0 shares in this company as well, but here's my play on this. So if you haven't been keeping up with the sports world, the MLB and the NBA is back, but football is the next thing on the docket, right? So a lot of college football divisions have been in discussion, and they have some have already said that they're not going to have football this season. This really hurts DraftKings. A lot of its revenue comes from football. The reason I don't own any shares currently is I'm waiting/betting on the NFL season to get postponed or not happen at all as players opt out. That's probably a contrarian belief because the NFL has already given players the opportunity to opt out, and they're moving forward as they're going to start on time. But if you look at the schedule restructure of the NFL, I believe it's the first 4 weeks is all completely out of conference play. So I think the NFL is prepared and ready to either postpone or just completely delay or cancel the first 4 weeks of the season and then proceed accordingly after that. I'm waiting for news of a NFL postponal or cancel to hit, and then I'm going to watch DraftKings assumedly plummet after that, probably take a 10 to 15% hit, if not more, and then that's when I'm going to buy on DraftKings because I do think long-term, I think people love gambling as it becomes legal in more and more states and more accessible as an app on the phone. I think DraftKings is a long-term winner here, and I see a lot of growth out of that. So those are the 10 I wanted to talk to you guys today about my post-COVID rebound picks. I've got a lot more, but I don't want to make this an hour and a half long video. I think 19-20 minutes is pretty long, and it's going to take a long time for me to upload this with a hotel Wi-Fi. So yeah, if you guys have any questions about where I get this information from, or how I do my research, or any other stocks you want to hear me talk about, just let me know. Shoot me a message. Drop it down in the comments below. Remember to hit the like button and subscribe. I'm going to get back to doing more research. Thanks for watching, and have a great day, and good luck out there.